Hello everybody and welcome to my channel where I'll be using technical analysis on the stock market, show you levels that I think are important and what to look for this upcoming week. We had another fairly crazy day in the overall market. The sentiment overall, just want to point out it has been slammed into the very half an hour, last 15 minutes of the day into a bullish sentiment. I want to remind everybody that Monday coming up is President's Day, so the markets will be closed, the U.S. markets. So it will be technically a 4-day week coming up. And what I see the markets doing for us, just for this light week, typically in light weeks like this, 4-day weeks, most institutional money doesn't really participate as much as they do in full weeks. An example of that would be like Thanksgiving week, Christmas and New Year's, those weeks. They are kind of being poised to the same degree as this week. Really, for the last week, we have been sideways, testing this level, going down, filling a gap that we created on the way up, getting rejected again, retesting the trend, and then here we are coming into Friday, the last half an hour of the day, and a magical bid comes from, out of nowhere and actually buys it up. Really canceling out our divergence. If you go into like a smaller time frame, we'll say the 5, we burnt out through the divergence, giving us a bullish sentiment going into a light week, is what I really want to emphasize today for you guys. Not much institutional money going to be taking part, so a low volume, light week will typically follow the sentiment that it was given, the week prior. So here we are, we were sideways. If we would have ended the week under this level, it probably would have been a sideways to down light week. But this week, I actually see us going sideways to up. Okay. Individual stocks may diverge or stray away from the trend they have been following due to light volume. I have noticed in just a couple stocks. Previous weeks doesn't have to happen, but this is just one thing I want to point out. We've been battling this for a week now. In the last minute, until they pop it up and run it, making everybody say, all new highs across the board. We have nowhere to go from here, which you can look at it in one way. We burned through a divergence. If you look at the MACD, we've actually crossed over. That's a bullish crossover when the blue crosses the orange. And we are on our way up. We're over halfway, so I won't necessarily expect it to go that far, but it's a bullish crossover. Bullish canceled out our bearish divergence, which is bullish, and popped up above a major support level in your major markets, creating a bullish sentiment again, guys. Okay. What you need to keep a looking eye out for are these two levels. One thing I've noticed, it wasn't necessarily a specific level. Just real quick, I'll just point this out to you. This first line, we really came up here, we tested it, we gapped above it, we came down, we popped above it, which created the second line. Okay, we came up, we popped above it, kind of tested the line, failed, tested the lower line, failed again. Came back up, tested the lower line, gapped above it, using the top line as support, fell through it, using the second line as support. Okay, fell through, using the second line as resistance, and then popped above both of them. Okay, and here we are now. So, yeah, this may go up for a little bit. I'm not going to give you a number as a top to go by. has potential going all the way up to 4,000. I wouldn't say this week, but it has potential, okay? I want to see a back test of this and then a further up to confirm going further up. Otherwise, we're just going to stay up here testing the high at 39, 37 and back in this trend just for the next 4 days. Okay, until we get about the 19th. It's 5 days, Monday. Maybe test support, maybe test our line and go up from there. That's just one thing I want to point out. Switch to the triple Qs real quick. Triple Qs are doing the same thing as the SPY. Volume isn't really the best indicator to go by, but one thing I want to point out is this uptrend where volume is really just dying out. We had a really big one. That was probably a selling volume candle, but volume's dying and this is continuing up. Alright, this is what was happening with this. It's still continuing up. We got our one candle, which isn't necessarily a confirmed candle, but if we switch down to somewhere lower, that candle would have been popping above our resistance, and that is technically a confirmation of your bullish divergence or your bullish momentum. So think about that one for this weekend. This IWM, it didn't have the volume candle there. This one really has the decreasing volume and the increasing price. This one didn't have a major sell-off. What we did is we tested this line, we broke above it, came down, ended the day on top of it, gapped up, failed the line, back test, fail. With this bullish sentiment overall giving throughout the market, I see us heading towards the top of this trend line, 230. That's going to be about the same time I feel SPY hits about 4,000. And the triple Qs somewhere around 339, 340. Oh, that's SPY. No, triple Qs. Yeah, 339, 340. Another reason I'm going to switch to the VIX real quick after the IWM to further my case more in this low volume week with the bullish sentiment coming up. This white 22 level, this is the VIX. Under 22 is bullish. This red line was just really a support level. It's extremely bullish, and we have our gap all the way down to this third red line. What we are doing, our markets were going sideways. VIX was getting hammered down more and more each day. Okay, this very last day, the market shot up and the VIX is just getting body slammed. Not necessarily a new low. Is technically a divergent low. I have heard a lot about the short squeezers switching from your silver and all your regular stocks to the VIX, or retail investors, one of them. They're all buying VIX right now, which can essentially push volatility into the market. Doesn't necessarily have to knock the price down, but if you push volatility up, it will have some effect to the market. Maybe not necessarily what they want to happen. Just another thing I want to point out, with the VIX getting body slammed down at under our support level, under 22, under 20 and a half, are really just sentiments to give you a further push up into the market. There's no volatility in here. Nothing is keeping investors from putting their money into it. Another thing I've been talking about is my belief that there are a lot of people still out of this market until the VIX gets below 18.4, fills this gap. I mean, this is the highest the VIX has really ever been for this extended amount of time. All the neutral and bears that you see, I didn't pull that one up for you guys, but are probably just people waiting until the volatility dies off to put their money in. Okay, market's shooting up. Technically short squeezing because there's a lot of people short squeezing the market. No volatility gives all the more room to move up into this light week. Again, it is a light week, so any major ups or downs I wouldn't panic on because they will just be majority retail investors moving the price that they want to. I would really wait until next week, Monday, your first day of your full week, to either confirmed your break a trend that wasn't expected on this light week, or to back test and continue the trend that it was on and supposed to be on, if that makes sense for you guys, okay? So just keep that in mind for these next 4 days to come, starting Tuesday. If we switch to gold, we can switch to gold and I will show you. Okay, this is the channel we have been traveling down. From the short squeeze in silver, it's kind of created a wedge. If it wasn't for this one really low week, we would be in this wedge. This is what I've graphed out after I've seen the short squeeze in silver. I don't think it's going to pop out of this wedge. I think it's going to continue down this channel. And if I put it out of a log scaling is the only way I can get a lot of charts to map out. But let's just say this is your general uptrend. That's your median. We'll call that your median. We could even bring this down here, okay, to 1400 instead of 1500. But this would be your median. Same thing with log scaling on a month. This is log scaling, anywhere from 1,000 to 800. Gold as of right now to me is just overpriced. I see this wedge, but do you see this major ramp up, equal momentum? Now we're losing it. Momentum's headed down. We have one pop up. That was your pop up here. Otherwise, we're just headed down. We haven't created a divergent low. I think we're going to follow this channel down, and I'd be looking into being a buyer around 1500. I just don't want to put my money in something I see graphing out to the downside. Yeah, gold is sentiment based, and if people want to buy it, they will. But our currency has strayed away from gold to a point that we don't even use gold the way we should. We put a sentiment value on it as opposed to backing the dollar that way we should. Back in 1972, when we strayed away from the gold-silver standard, everything has been manipulated since then. You can look it up. 1972. I mean, even in gold, that's probably right here, guys. Look, it's 1972. For how many years? For 200 years, we can go sideways, but in 1972, we instantly start shooting up, okay? Do you see the manipulation behind this? Why would you buy at the top? Why would you buy now expecting it to go higher? Okay? That's just what I want to point out to you. Before you get into this market, you have to understand that it's all manipulation. A price of anything wouldn't go up today, down tomorrow, and then up the next day if it wasn't manipulated in one way, shape, or form. Inflation, yeah. Up, then down, then back up, then down, then up. It's just 100% manipulation. If you don't understand that, I wouldn't put your money into it. Okay, switching to silver real quick. Again, this line down here is our median line. I expect silver and gold to come down and hit them. 1950 to 20, depending on when we get there. But here we are. I got one new line on silver just because of this breakout. But this is really... Silver has a wedge. Silver doesn't really have a channel, so I guess I could see it breaking out. But I don't see it going too much farther than gold. With the dollar doing what's doing, headed up, all commodities and things valued in the US dollar will be headed down. You need less dollars if the dollars are stronger to purchase something at a certain price. Okay, switching to Bitcoin. Switch to Bitcoin. And we got... Why did I switch to a 5? Let's get a 30. Alright, let's give it an hour. Log scaling. Here we go. Following this trend up, this trend. And I feel like we're just going to keep back testing this one until we make or break it. Here we are, back tested, back test, doom, back. Here we are coming in for another one. But as of right now, until we break this, 47. Right now, it's like 47. We'll call it 500. Break below that. Look out below. Your 200 is at 45,000. 44,900. Okay, those are your support levels on here. The bonds. Again, the bonds are getting sold off. The bonds inverse the market. Again, with our bullish sentiment being set up for this light week, the bonds going down, market's headed up, gives us all the more reason to even make newer highs in the bonds, or in the markets, because the bonds are selling off. Still a technical divergence in a low on a daily and an hourly, but we're getting close to here. Okay, you see the volume, got nice lots of volume just about all of this day. Doesn't mean, I kind of expect a gap up Monday and a crap from there, from the bullish sentiment. Same thing we hear. I expect we come down here, maybe even tag our trend, and then continue to the upside. But we're coming to a major turn point to where these things really can't diverge anymore. Got our 30-year yields. I'll get a 10-year yield. A 10-year is good to look as opposed to a 20-year bond. A 30-year yield. In your yields, your banks, really, your yields will forecast your financials. Sector. Okay, yields go up. Banks make money in the short term and lend long term. Okay, yields go up. They can make more money short term. They can lend all that money that they made out long term, make their money back on that. Yields go up. It will be good for the financial sector and the bank, but at a certain point, the farther it goes up, it will have a drastic effect on the economy and the banks itself, as referring to the yield curve. Yield curve keeps steepening, as in keeps going up and up and up. If I was to compare this one to a 2-year or a 5-year, they would be, all the way up here. They're really a stable economy. Your yield curves are right together. The further your steepening of your yield curve, yeah, you're trying to stimulate your economy now, but it's having down effects in the future. That will all collapse within itself. Switching to the dollar. These are the major levels we need to watch on the dollar, the 92 and the 89. Okay, this was the major trend we were following, and then we broke. I created a second trend line, and all we've done is really bounce from it since. What I see with the dollar is, just a further backtest of this. What we are is creating momentum. MACD's headed down. I just see a further grinding of this. Again, whether we pop up to the up or the down or the upside will really indicate what the market is going to do or wants to do. There's nothing here on a daily or an hourly that says to me the dollar is headed to one direction more than the other. MACD really says it's headed down, and RSI's momentum is headed to the upside, but that doesn't mean come Monday, I think the dollar trades, but Tuesday when the market opens, where will the dollar be at that point? We'll have broke trend line, we'll have retagged our current trend, bringing the market down. Just all things you have to look out for and keep your eye on. Lots of money in here. You gotta understand risk management and things to watch out for before they turn, before you can lose too many money. Have stop losses and things like that for a reason, but nobody's 100%. If you were 100%, you wouldn't be doing this because you'd have all the money you would ever need. Okay, does that make sense? Yeah, the VIX getting body slammed shows the bullish sentiment coming into what I believe a low volume light week. The VIX did have a slight divergence. Did I point that out? Slight divergence. I mean, technically we haven't hit a daily divergent low, so I wouldn't expect a trend change from your divergence. I still expect the VIX to get even down further. So we can see what happens from there. That'll take the markets up even farther, maybe creating a short-term top and falling from there as the VIX starts to raise higher. And if they do short squeeze VIX at any point, that would bring just a back test into the market to that important level of 39.18 on the S&P. All right. Yeah, so really expect the same thing as you've seen Thanksgiving and Christmas and New Year's. If you want to look back on any of those graphs, that would give you really what to look for. But here we are with the put to call ratio. Give you some indicators of some more confirmation of either up or down. And here we are with the put to call ratio, starting the day off Friday. Extremely more puts, more calls. Extremely bullish. Again, I think we had another up day in the morning. Everybody switched their puts to calls as the day progressed. We even got all the way up here to almost 1 in puts, and we ended the day right about here, which means there's more puts being put out than calls. People expecting the market to drop. What I've been taught is typically act opposite of this put to call ratio, which gives us our bullish sentiment into Tuesday. Okay, quick on oil. Oil was not up the last time I looked at it. Here, we were sideways. What we're doing is going sideways. So if we're coming in for this back test of this 50 or the 100, this is just on the hourly. I think why we're up here is because the 20 crossed 150. That's very bullish. People see that and it pops up before that happens. Once it happens, that's typically the top. So we'll see what happens from here. Put the call ratio. If we look at our Fangmans, the market carriers, they were all positive except for Netflix. At our sectors real quick, every single sector was green except for real estate, which may as well have been flat, giving us again a bullish sentiment until into Tuesday. Everything's green. Why would we think otherwise, right? Okay, and then what I want to switch to right now is our fear and greed indicator. Yesterday we were at 58. Now we are at 73. Okay, here we are again. And this is the CBDO put to call ratio that they have, and we have been sideways for almost a month now, guys. Into the put area. So sideways, we've really closed today for the last month in the same area of more puts being put out than calls. Which is our 73. If we switch to our heat map real quick, just to show you where we are green and where we are red. Our major looks like eating and travel. Our consumer cyclical when it comes to our lockdowns, that looks like they're getting hit right now. And utilities right now is the sector really getting on the beat down. Entertainment. Consumer communication services is half and half, but it's got your Google in there and your Facebook. They really went sideways. Keep an eye out on those, but utilities, this is one thing to look at. Sector rotation. Utilities is having a bad day. Even though, if we go on the overall sector, utilities, where is it? I don't think I have it on there. Utilities would have been sideways. Just one thing to keep in mind. Market's going sideways, losing momentum into a light week. If anything major happens, you guys don't freak out. And I will be back the next day or two to update on anything that happens. You guys have a good week. Good luck. And please like, subscribe, comment below. Have a good one.